Lisa Endlich, Goldman Sachs, The Culture of Success. Dive into the world of Goldman Sachs, a premier investment bank, and learn the core values that have contributed to its success. Discover how this Wall Street titan consistently places the client first, contains ego, controls greed, refuses hostile takeovers, and focuses on teamwork and understatement. This summary of Lisa Endlich's Goldman Sachs, The Culture of Success, will guide you through the historic evolution of the company, starting with Marcus Goldman's humble beginnings in 1848 to its dominance of the banking industry. With an engaging and instructive approach, unravel the pivotal moments and significant decisions which have shaped this financial powerhouse.
Goldman Sachs, Core Values for Success. Goldman Sachs' success is rooted in its adherence to its core values. By putting clients first, containing ego, controlling greed, avoiding hostile takeovers, prioritizing teamwork, and practicing understatement, the company has become one of the world's premier investment banks. Goldman Sachs has cemented its position as a leading investment bank by adhering to its core values. The company places clients at the forefront of its dealings, requiring employees to view clients as temporary wards that they must serve to the best of their ability. Success breeds hubris, which can lead to poor decisions. Thus, the company emphasizes the need to contain ego and focus on long-term greed, neglecting immediate bonuses. Furthermore, the company does not accept hostile corporate raiders as clients, as such actions may create future enemies. Goldman Sachs builds its culture around teamwork and selects its employees based on ambition and team spirit. The company's performance evaluations also prioritize cooperation among different departments, rather than individual success. Finally, Goldman Sachs partners practice understatement, avoiding conspicuous consumption to create a more humble image. In conclusion, Goldman Sachs' adherence to these core values has made it one of the world's leading investment banks. The rise and fall of Goldman Sachs. From humble beginnings, Marcus Goldman built a successful trading brokerage by exchanging cash for IOUs. He passed the firm down to his son-in-law Sam Sachs and underwrote Sears' initial public offering in 1906. But greed would later compromise the firm's judgment and contribute to the Goldman Sachs Trading Corporation debacle in the wake of the 1929 stock market crash, damaging the company's reputation for years to come. Sidney Weinberg, who started as the janitor's assistant and later became the firm's chairman, helped turn Goldman Sachs into a major player by securing a secretive underwriting deal with Henry Ford. But the firm faced censure from the SEC over the Pennsylvania Central Railroad and lagged behind competitors in the 1970s bear market. The 1980s saw Goldman Sachs rebound and enter a new era of success, but their strong client focus eventually gave way to arrogance, leading to yet another downfall as the financial scandals of the era were exposed. Throughout its history, Goldman Sachs has experienced both triumphs and setbacks, but one thing remains constant: it is a name synonymous with Wall Street. Goldman Sachs, surviving the 1980s merger mania. Goldman Sachs experienced a rough and fruitful path from 1966 to 1989. During this time, two Johns, John Whitehead and Sidney's son John Weinberg, succeeded Levy, and defense against corporate raiding became a crucial part of the company's investment banking earnings. The firm's merger and acquisition earnings grew from $660,000 to $90 million from 1966 to 1980, and by 1989, these earnings had accumulated to $350 million. By the mid-1980s, Goldman Sachs had become one of the elite ranks of investment banks, with Ford, Unilever, and Procter & Gamble as clients. The Chinese wall between banking and arbitrage was thin, which led a Goldman Sachs team led by Robert Rubin, with Robert Freeman as his chief assistant, to delve into the merger mania of the 1980s with a billion-dollar portfolio. Goldman Sachs presented defense strategies to CEOs across America, helping them feel secure in the face of the hostile takeover. However, in May 1986, Freeman was charged with insider trading and sentenced to 109 days in federal prison. Nonetheless, by not partaking in the speculative excesses of their competitors, Goldman Sachs entered the new decade in a better position than its rivals. Goldman Sachs, the global success story. In the early 90s, Goldman Sachs underwent a leadership transition where Steve Friedman and Bob Rubin became co-chairman. Despite Rubin's departure in 1992, the firm continued its successful trend of high-profit proprietary trading. In fact, the launch of their principal investments division in 1991 resulted in several profitable investments, including the purchasing of Ralph Lauren's shares. London office's rise to greatness is also a highlight, showcasing the company's transformative move from a traditional corporate structure to an international firm. Despite the treacherous nature of proprietary trading, Goldman Sachs maintained a profitable status by controlling risks. The firm's overseas expansion began generating profits by the mid-90s and accounted for almost half of their pre-tax profits by 1998. The uniqueness of Goldman Sachs. The story of Goldman Sachs' transformation from a private partnership to a public company is a tale of cultural change. The Wall Street firm had previously operated discreetly, with little press coverage, but considered going public in 1986 before deciding against it. Instead, in 1987, it took its first outside investment. 12.5% of its ownership was sold to the Sumitomo Bank of Japan for $500 million, valuing GS at $4 billion. In 1996, GS Partners rejected another proposed IPO and, in 1998, nearly unanimously approved going public. However, September 1998 saw Goldman Sachs withdraw its IPO plan.
The intriguing world of Goldman Sachs demonstrates the importance of core values in forging a successful and enduring company. Through a strong client focus, controlling egos, and encouraging a culture of teamwork, Goldman Sachs has managed to withstand numerous trials and tribulations over the years. By rejecting hostile takeovers and promoting modesty among its partners, the firm has cultivated an exceptional image. Despite setbacks and challenges, such as the Great Depression and various financial crises, Goldman Sachs remains a powerful force in the global financial landscape. This summary encapsulates the key messages and lessons from Lisa Endlich's book, leaving readers with a clear understanding of the significant factors that contribute to the longevity and success of this Wall Street titan.